Okay, so where we were at last time. So I will quickly briefly review what we have learned from Monday. Okay, where we are Monday. So we learned about returned earnings. Okay, what is returned earnings? That's the earnings that retained in the company, right? After the owners take some money out, which is called a dividend. Okay, whatever left, that's called the returned earnings in the company. You learned about the format of the statement of the changes in equity. Okay. So you know that what are the changes, is how the change is calculated. We have a particular equation help us to learn how to do this calculation, right? Okay, and then we talked about the statement of financial position. So the most important equation, balance the equation is assets equals liability plus shareholders equity. Okay. So that has to be balanced, otherwise something's wrong with the bookkeeping. Okay. And then we talked about, we further classified assets liabilities into two categories, current versus non-current. Okay. So I will give you one example. Okay, for the current versus non-current. Okay, so there's 1 year in the accounting CPA exam. Okay, so there was a case. The case about a farm growing ostrich birds. Okay, the operation is like this. So they would hatch the eggs. Okay, and then they will sell the male birds. Okay, within like half a year when they fully grown for meat. Okay, and then they will keep the female ostrich birds to lay eggs. Okay, and then in the future years they sell the eggs. Okay, so now you tell me, first of all, are the assets, the male bird and the female bird, are the assets? Okay, so I see people. Okay, yes, that's right. Yeah. So both birds are assets, right? So you tell me which one is the current asset? The male or the female? Which one is the current asset?
The male?
Would it be the male?
Some said in the chat.
Yes. Yeah, because those birds will be sold within a year, right? With a short period of time. And you can convert the birds into cash, right? Those are the current asset. And for the female bird, you are going to keep it for multiple years, right? So the reason why it generates profit is because the female birds lay eggs and you sell the eggs, right, for money, right? So you keep the female birds for more than, I don't know how long you would retire a female bird, right? What would be the period for them, you know, producing the eggs? But the idea is if it's more than 1 year, right, one operation cycle, then it's a non-current asset. If it's within 1 year, right, then it's a current asset. Right? Does that make sense? So if it's a non-current asset, if the male bird is a current asset, which asset account it belongs to? I introduced a couple of current asset accounts. Remember? So which account does the male bird belong to on the statement of financial position? Is it accounts receivable? Prepaid expenses? What it is? Anybody? Inventory. Thank you. Thanks, Joshua. Inventory. Yeah. So those are the meat inventories, right? So basically, you know, you sell the inventory in exchange for cash. Okay, and okay, so that's good. Okay, so that's about current asset versus non-current asset. Okay, that'll be one example. All right. Okay, let's take a look. We talked about the okay here. So we talked about the depreciation. Okay. There's one example I want to show you. Okay, here, this is the slides I want to emphasize. Okay. So we also introduced the concept of depreciation, right? What is this depreciation expenses? The depreciation expenses is the cost for using your non-current asset, right? So basically, you have a new building, okay? Over the time, okay, when you use the building, over the time, okay, the building will getting, older and older, right? The value of the building will decline, okay? So there is a cost of using the building, right? Generate whatever the economic benefit you realize from the company. So how are we going to recognize that? We use something called the depreciation expenses. Okay? And then we have one account to capture the total amount of depreciation recognized to date. Okay, that's called a cumulative depreciation. Okay, that's the amount of total depreciation that has cumulative since the beginning of the acquisition of the asset. Okay, so it's important you know that for any land is a non-depreciable. Okay, land only have one cost account, right? So in this case, you do not see a cumulative depreciation account for land. Okay? But for buildings like equipment, there are two accounts. One is called a cost account. Okay, so the cost account is, in this example, the buildings, that's 75,000, right? That means the company paid $75,000 to acquire the building or to construct the building. Then the second account is the account called accumulative depreciation. Okay, this is a contra asset account because it's a reduction. So that means how much depreciation has been recognized to date. Okay, and the difference between the two, that's called a carrying value, carrying amount, right? 75 and 15, the difference is 60, right? So when you report 60, you are saying that, I believe the building now worth 60,000. Okay? So that's something really important. I want to just quickly refresh your knowledge on that. And another thing I want to also emphasize is for these non-current liabilities, they could possibly have a current portion. So the example I give is a mortgage, right? You pay monthly payment or maybe bi-weekly, whatever the bank agreement. So you make this payment, okay, and for a long period of time, like 30 years, right, 25 years, okay? So it's a non-current liability. However, you know that in the next 12 months, you need to have 12 payments, right? So those are the liabilities within the 1 year. So those has to be considered as current liability. So that's the current portion of the non-current liability, and that current portion is current liability. Okay? Make sure if you take a look in this example, okay, in this example, you can take a look at the current portion of mortgage payable, 1,000. That's the liability within the next 12 months. That's classified under current liability. Okay, current liability. Okay, do we have any questions before I start the fourth statement of cash flows?
Doing pretty good.
Good, thank you. Okay, awesome. So today we are talking about, okay, the last one, okay, the statement of financial flows. Sorry, the statement of cash flows, okay? So if you, later on, if you learn any knowledge about finance, right, you would probably have heard the term, the saying that cash is the king, right? Cash is the king. So for business, cash is so important, right? Cash is so important. I often use the parable, cash is like the blood, okay? So doesn't matter how big the company is, right? If you don't have the blood, then you die, right? So think about the elephant, right? That's a big animal, right? It's a very, very big animal. You can think of that as a big firm, right? If elephant does not have cash, okay, it's just like the animals does not have blood circulating, right? So then, it doesn't matter how big you are. If you don't have cash, that's it, right? The business will be bankrupted, right? You could have on your balance sheet like millions of dollars of assets, right? Buildings, lands, right? Worth like multiple hundred millions. But if you're running out of cash, too bad, right? You bankrupted, right? So cash is the key. It's always important for any business owners. You understand, you better have enough cash on hand, right? To keep the operation going, right? To keep the operation going. So we talked about statement of cash flow. This statement will give us very useful information about where the cash comes from. Okay, how did I get the cash? Okay, as a company, and it also tells me where did I spend the cash. Okay, so this is the statement of cash flow, very, very important. So there are three major activities for the company. Okay, operating activities, investing activities, and financing activities. Okay, that's the three important activities for any corporation. So we are going to cover this statement briefly. As we go towards to the end of the semester, we have a whole chapter to talk about to prepare a statement of financial flows, cash flows. Okay? So we are just scratching the surface at this moment. Okay. So for operating activities, okay, operating activities. So that's basically your operations, right? Literally, you can see the word operating. It's about the operations. Okay. So it's mainly focused on your current assets and current liability. This is important. I will say that again. So this operating activities mainly focus, okay, on current asset and current liabilities. Okay, that's about operating activities. So current asset, for example, accounts receivable, that's a current asset. Accounts payable is a current liability, right? Current liability. Now, for investing activities, okay, university, okay, construct the science center, right? That's the investing activities, right? So investing activities is really about long-term asset, non-current asset, okay? So basically, the purchase or sale of long-lived assets such as PPE, property, plant, or equipment, those are all considered as investing activities. Right? If you purchase the bond from the market, from the debt market, right? You want to earn interest by holding the debt, right? Maybe it's a government debt for 25 years until its maturity. Right? Those are considered as investing activities. So what's investing activities? It deals with non-current asset, okay? Non-current asset. Financing activities, okay, so what's left? Can you tell me what's left? We talked about current asset, non-current asset, right? And we talked about the current liability, right? So what's left? Can anyone tell me what's left on the balance sheet? Okay, so I guess someone's prefer to just to use the chat. Just give me a second. Non-current liability, very good, right? That's a long-term liability. Yeah. If you can please speak up, that'll be really efficient, right? Because right now it's hard for me to go back to the chat. So non-current liability. Okay. What else? We haven't talked about it yet.
Equity.
Equity. Yeah, very good. Thank you. So okay. So financing activity is about non-current liabilities and equity. Okay. So did you see how the three different activities differ from each other? They are dealing with different elements from the balance sheet. Okay, I'm going to show you one example. Okay, we posted this. We posted this on the Moodle website. Okay, so this is one example. Okay, I will make it bigger. Okay. So this is the balance sheet, right? Balance sheet. We also call it statement of financial position. Okay, so you can see here is the current assets, right? Here is the current liabilities. So this part, okay, it relates to the operating activities. Okay, current assets, current liabilities. These sections, these two sections, related to operating activities. Okay, and here the non-current assets. This is the non-current assets that it relates to the investing activities. Okay, and now the long-term liability, the non-current liabilities and equity, this part, that relates to the financing activities. Okay, did I make this clear? Yes or no?
Yeah.
Yeah, okay, awesome. So it's important to know what part of the balance sheet is dealt with by the different activities. Okay. So I'm gonna go back here. Okay, so here, okay. Okay. So when you sell or purchase shares, right? Shares are equities. So that makes it financing activity. When you borrow money or repaying loans, okay, that's about non-current liabilities. So that's make it financing activities. Right? Okay. Okay, I want to see if you really understand this. So let's work on this example. Page 33, BE1-3. You guys all have your textbook by now? Hopefully. So I will maybe turn on my document camera just in case you don't have it. Okay, so let's work on, are you able to see the question?
Yep.
Okay, so let's work on this question. BE1-3, okay. Let me see. Okay, so classify each item by type of business activities, operating, investing, or financing, and also indicate whether it results in an inflow or outflow of cash. Okay? Inflow means you receive the cash. Okay? Outflow means you pay the cash. Okay? Okay? So let's take a look at the first example. A loan taken out from a bank.
So it'd be financing and inflow.
Thank you. So you receive the money from the bank, right, in the form of a loan. So it's cash inflow to you, right? And it's a non-current liability. So it's a financing activity. Okay, very good. Thank you, Tyler. So cash received from customers.
Would that be operating inflow?
Okay, very good. Operating inflow, right?
Inflow.
Yeah, very good. Because cash is a current asset, right? Cash is a current asset. So that falls into the operating activities. And the fact that you receive the cash, right? That's a cash inflow. Okay. Next one, sale of office equipment that the company is done using.
It'd be investing and investing activities in inflow.
Very good. Thank you. So it's investing because the office equipment is a non-current asset, right? So that's for the investing activity. The fact you receive the money, you sell it, you receive the money, so that's a cash inflow, right? Okay, very good. Thank you. Next one, dividend paid to shareholders. Dividend paid to shareholders.
Finance that activity.
Yeah, outflow, inflow.
Outflow.
Outflow, yes. Okay, money goes out to the shareholders, right? Outflow, and the dividend, right? Dividend is, if you remember, right, the way you calculate the return earnings is the opening balance of return earnings plus net income minus dividend, right? So that's your closing return earning balance. So dividend is under the equity section, right? You remember that? Okay. Now, common shares issued to investors.
Investing activity.
Sorry, I cannot hear you.
Investing activity.
Investing? Anyone else?
Should it be financing activity?
Financing, I'm sorry, financing activity.
Financing, yes. Why? Because common shares are equity, right? Equity is for the financing activities. Inflow or outflow?
Inflow.
Inflow, you receive the money from the shareholders, right? Very good. Loan repayment. Loan repayment.
Financing activity.
Financing, inflow, outflow.
Loan repayment. Inflow.
Inflow,
Outflow.
outflow, because repayment means you pay the bank, right? You pay the bank back, right? So that's repayment. Payment to supplier for inventory.
Operating activity.
Pardon me?
Operating.
Operating, very good. The inflow of outflow.
Outflow.
Outflow, yes. You pay the money to the suppliers. Purchase of an office building.
Investing and outflow.
Very good. You pay money to buy a building. Outflow, and a building is a non-current asset. Very good job. Salary paid.
Operating activity.
Operating activities, right? Okay, it's about your current liability, right? So you pay people salaries, and the fact you pay them, it's a outflow, right? Okay, you guys did a good job. Awesome. Okay, so I think you guys got it. Okay, you guys got it. So good job. Okay. I'm going to switch. Okay, go back to that screen. Does anyone have any question? Pretty simple. Okay, awesome. Can I move on?
Yeah.
Okay.
Yeah.
Thank you. So let's keep going. Okay, so if you remember, this is the order how I introduced the four statements. I first talked about the income statement, and then statement of changes in equity, and then the statement of financial position or balance sheet. And today I talked about the last one, statement of cash flows, right? So there's a reason why I follow this order. Right? I'm not just randomly pick the order. There's a reason why I follow this order. Okay. So basically, this order, you see the arrow, okay? from the top to the bottom. That's how the information flows, okay? So in order to prepare statement of changes in equity, I have to prepare income statement first because I need information from that income statement, okay? So each statement, okay, following this order, feed more information to the next statement. Okay? So if you are in the exams, this should be the order you follow, okay? When you are asked to prepare financial statements, right, you should follow this order, okay? Otherwise, it will be kind of wasting of time. It won't be very efficient, okay? Okay, so this is one statement feeding into the other, and then the third, and then to prepare the last statement, you need the 3 statements, okay? So I want to show you, okay, I want to show you what do I mean by that, okay? What do I mean by that? Why they are interconnected, these 4 statements. So again, let's back to the document camera. Okay. So let's take a look at, starting from page 15, I think. Page 15 or page 19. No, sorry, page 15. Do you have your page 15 here with me?
Yep.
Okay. So just in case you don't have it, I'm sharing my document camera here. So this is the, if you take a look at, you find the title of the statement. This is the income statement, right? So you always prepare this first, okay? So you can get a number called net income, right? You are going to need this number, net income, for the second statement. Okay, so I'm going to show you here. So turn to the page 17. Okay. So this is our second statement in the order. Okay. Statement of changes in equity. Okay. Did you see the net income number? There. That's the net income number, right? Right? Okay. Because in order to know your ending balance of the returned earnings, you need to add your net income minus the dividend. Okay. You see why you have to prepare this statement first. You have to prepare the income statement first. Your income statement, prepare this statement first. So you have a net income number, right? And this number will go, the net income number will go here, right? Right? See that?
Makes some sense, yeah.
Yeah. And so now in this statement, you know the balance for common shares, you know the balance for retained earnings, and the balance for total equity, right? Okay, now let's move on to the third financial statement. That's the statement of financial position. So in this statement, that's the statement of financial position. Okay, so you have assets, you have liability, you have shareholder equity, right? Are these numbers are familiar? You see the 3 numbers here? Are these familiar?
From the past 2 ones.
Yeah, from the second statement, right? The 10,000 common shares and the 10,542 returned earnings, right? Okay. So, and you also have a cash balance here, right? You know the cash balance is this, right? And so in order to know, the last one is this cash flow, statement of cash flow, okay? And you can see that this statement is organized by 3 activities, right? 3 activities. You have operating activities, right? And then you have investing activities, you have financing activities, and then you have a net change in cash, okay? And then what's your opening cash? Opening plus change, that's your ending, right? That's your ending, 11,400, right? You see this number, right? So in order to prepare this statement, you have to have the other 3 statements prepared, okay? So the point here is, you do not start randomly with any statement. You have to follow this order. Okay, so go with me again. The first one is income statement. Okay. Second one is the statement of changes in equity. And the third one is the statement of financial position. You also call it balance sheet. And the last one is the statement of cash flow. Okay. Are we clear with this?
Yes.
Yeah.
Okay, thank you. So let's go back here. Okay, so on this slide. So make sure you remember this order, right? The information feed into the next one, okay? Now, let's take a look at this problem, okay? This problem is on page 41, okay? So just stop me if you think I'm going too fast, okay? Otherwise, I assume you are okay with the pace, okay? Just tell me to speak up, let me know, okay? Otherwise, I won't know, okay? Page 41 and problem 1-9A. So that's this problem. Okay, so these are the incomplete financial statement of a company. Okay, so you can see this is the income statement. Okay, but it did not give you the complete information. They want you to feed in to figure out these numbers. Okay, they want you to figure out these numbers. So I give you some time to work on this. Okay. Similar ideas, right? For the statement of changes in equity, there are some unfilled spots. You need to figure out what are these numbers. Okay. So can you please work on this?
So anytime that there's like brackets, we have
Yeah.
to find, okay.
Yeah, I think the brackets is numbered from 1 to 13, right? There are 13 spots for you to figure out. If you are done, let me know, okay? Are you guys done? You need more time?
I'm pretty much done, I think.
Okay. Awesome. Okay, let's work on this together. Okay, let's work on this together. So number one, so that's this one here, right? Number one. So you have a revenue 225,000. Okay, and then minus subtract number one equals 45,000. Okay, so number one should be 180,000. Okay, 180,000. Does that make sense?
Yep.
Okay, and then that's your income before income tax. Okay, and then you have expenses, income tax expenses, 9,000. So now the number two should be the difference between the two numbers. So that's gonna be 36,000. Did you all got this number? Yes?
Yep.
Okay, good. So now, what about number three? What is number three? Net income, right? What's number three then?
36,000.
Yeah, because this number two, right, equals number three. So number two will come here, right? That's the 36,000, number three. So here would be 36,000. Now it's number four, right? So your number four is the closing balance of return earnings. Opening balance is 0. Net income 36,000. Dividend 15,000. So your number four should be the difference, right? So 0 plus 36,000 minus 15,000. So this number four is 21,000. Does that make sense? Okay. So what's number five? Number five, total equity for the component of common shares. So that would be just 250,000, right? That's the new issued share. Okay. And then number six equals number three, right? Equals number three. That would be 36,000. And what's number seven? There are two ways to calculate number seven. Okay, you can go with 250,000 plus 21,000. Okay, so you get 271,000. Okay, if you add from this column, add up the column. Okay, here, you should get the same result, 271,000. Okay. So that's the number seven. Let's take a look at number eight. Number eight. So how can you know number eight? If you want to know number eight, you have to know number nine, right? How can you know number nine? How can you know number nine? Total assets.
By adding liabilities and equity.
Very good. Liabilities, equities, right? So you can see total liabilities, shareholder equities is 964,000. That means your total assets better be this number, right? Right? Because they have to balance. So here, number nine, I have 964,000. So now it's easy, right? Now you just solve number eight. So you just work backward, right? Work backward. Did anyone have a number for this number eight? Who got a number for number eight?
Is it 300,000?
300?
I'm not sure. I'm just wondering if that's what everyone got.
Okay, anyone else?
Yeah, I got 300,000 too.
Okay, so 300. Okay, number 8 is 300. Let me quickly add this up. So 2, 4, 6, 4, yeah. 1, 6. Yeah, that's correct. Okay, that's correct. All these numbers add up to 964,000. Okay. So what about number 10? What's number 10? Well, the total liabilities is 693. Bank loan payable 600. Then the difference, right? That's the 93,000. Okay. Now, what about 11, 12, and 13? Where do we find this information? For the equity information, where we can find them?
You can find the total equity first by taking total liabilities and equity and subtracting it by total liabilities.
Okay, so here, right? So I have 271,000, right? So it's actually equal number 7. If you take a look at number 7, right? That's my total equity, right? In the second statement, in the middle, the number 7, 271,000. Okay, that is your number, right? So you can do both ways, right? So if you use 964 minus the liability at 693, you should also get 271. Okay. What about 12? Where do you find 12?
The second table, the same.
Yeah, and what's the answer?
Retainer earning, 20,000, right? 21,000.
Yes, very good. 21,000. Okay, and 11, so that's the 25,000. Remember, so this is where it comes from. Here, right? This equity information comes from the second statement, right? Is this okay? Does anyone have any questions on this question?
Yes, that looks good.
Okay, awesome. So I don't know, do you guys have exams or some other courses? I just realized the tendency today is not very high, and also you guys are pretty quiet. I'm wondering what happened.
I don't have any exams, no.
Okay, okay. Interesting.
Either.
Sorry, can you repeat your question? Sorry, your voice cut off. I can't hear you very well.
Internet's bad. Sorry.
Okay, yeah, all right. Okay, so we are good with this. Okay, so just make sure that you understand the interconnections between all these statements, right? How the information flow. Okay, and you remember the order to prepare the statement. Okay, so take a look. So we are going to do one practice question. Okay, so we are going to do one practice question. So if you have your Moodle website open, okay, let's go to your Moodle website, and you will find under module 1. Under module 1, you will find there is a lecture 4 handout question. So just click this. Excuse me. And you would find this this account, right? This account. So I'm going to randomly assign you guys to breakout rooms. Okay, you guys will work together on the income statement. Okay, and you guys will discuss with each other. You can unmute yourself. Okay, and there will be one member from your group who will present your results. Okay, and just send your result on the chat. Okay, so I hope you have this. Okay, I hope you have this open. So let's see, what should I do here? Okay, break out. Rooms. Improve. Okay. Okay, are you guys in the room now? Why don't you guys unmute yourself? Sorry, I'm just randomly checking the groups, and so you guys can talk about the question. So then, you know, what's the net income?
Okay.
Okay. Okay. Awesome. It's a small group. You can turn on the camera if you want. Okay, awesome. You guys are working on it? Good.
Yeah.
Awesome.
So yeah, so you just like us to do it's an income statement. So my internet was like cutting out when you were explaining.
Yeah, just do it for now. Just do an income statement and then send your result of the net income to the chat.
Okay.
Never mind.
So guys, you guys need help?
What are we exactly supposed to do here?
You guys prepare an income statement, okay?
Okay.
And then figure out what's the net income, and then you can send the message, your result to the chat.
Okay, cool. Thank you.
Okay.
Thanks.
Yep.
So we're confused. Like, are we
Oh.
supposed to turn this into an income statement, or
Yeah, prepare an income statement and then share your result about net income.
so should I write that
Chat.
down,
Yeah,
or should
on
I
chat.
just?
So our ending goal is to make a net income, correct?
Yeah, and then you
Okay.
you also want to, you know, just for your own practice benefit, maybe write it down in the format of an income statement.
The only thing we're like putting on the chat is just the final net income.
Yeah, yeah.
Oh, okay. Easy.
Okay.
We'll
Awesome.
do that.
Yeah.
Okay, I'm writing it down.
There now, it seems like the easiest thing to do.
Yeah.
But like, what does he want on the end? Does he want total liability?
So we want, so prepare the net income statement, prepare the income statement. So the end result will be the net income.
An income statement and the net income?
Yeah.
Okay.
And the sharing result is the other of the students.
Okay.
Feel free to turn on your camera. This is like a small group, right? So
Yeah, my camera's broken. I
okay.
can't.
Yeah. Okay.
Um,
How are you guys doing?
Oh, I think we're figuring it out.
Okay. So
Yeah, trying.
yeah. Do you guys have any questions?
I don't have any.
Okay,
No,
that's
me
fine.
either.
Okay, good.
Wait, so is all the expenses your production expenses?
Production expenses, that's probably just one part of the expenses. You also have salary expenses, rent expenses.
Okay.
Okay.
All right.
Okay. Bye
Yeah,
for now.
thanks.
Yeah.
Oh, I see
Thank
that
you.
now, yeah.
Hey guys, do you guys have any question?
Sorry, I was just having muting issues. I don't know that the other person in my group is actually here, so I'm just kind of by myself.
Okay. Okay. Yeah. Do you have any question?
I think I might have missed one part of your instructions. Oops.
Okay.
Just dropped my
Yeah.
mic there.
So just use that information on that sheet.
Yeah.
Prepare an income statement and
Okay.
share your result about your net income.
Okay, I think I'm on the right track then. I'll
Okay.
keep at it.
Awesome.
Thank you.
Okay. Yeah. See you later.
Okay.
Hello. How can I help?
I just had a question. Like, we're just supposed to find the net income?
Yeah.
Okay. And what do we do if we find it? Just wait?
Sure. If I'm gonna call everyone back. Okay.
Okay.
I'm just calling, and then we're gonna share the results. Okay. Thank you. Okay, everyone back. Am I still in your group?
No, I think we're in the main.
We're in the main. Okay.
Yeah.
Cool.
Okay, you guys all come back. Can you please share your result? What's your result on the net income? If they didn't give you the information, then you just assume that the taxation expenses is 0.
Oh, okay.
Sweet.
So yeah, they should give you all the information that you need, right? If there's no taxation information, that means there's no taxation, right? That is 0. We have one group, 71, 200. Anyone else? No?
We didn't get our final answer.
No? Okay. So let's take a look. Okay, so here. So I'm able to see my Excel sheet and also the information here.
Yeah.
Okay, so basically you have, in the beginning, you're gonna have a company's name, right? Company name. And then you're gonna talk about this is the income statement. Okay, and I don't know, this is the timing. I don't know what's the timing. It was not given the information. Maybe for 1 month, right? Suppose ended, July 1st, 2020. I'm just assuming, right? So that's the hiding, and then you want to go start with revenue, right? What's your revenue? Okay, so your revenue, did you see the revenue here? Okay, the revenue in the middle, that's 235,000. Okay, and then you want to talk about your expenses. Expenses. So what do you got here? Okay, so I'm going to make one more column. Under the expenses, you have different expenses, right? You have salary expenses, salaries expense. So that is, okay, so I need one more column here. That will be 84,000, okay? And then rent expense. I'm just following the order from the top to the bottom, 14,400. And then you have production expenses. So that is production 65,800. Okay, do you have any other expenses? No, right? That's it. So what's your total expenses here? Is the sum of this, okay? And so now you're gonna have a net income here. Your net income will be difference between these two numbers. So 7,800. Is that right?
Yeah, that's what I got.
Okay, awesome. So that's your income statement. Okay, that's your income statement. So what would be your next? What's the second statement? Second statement is the statement of changes in equity. Company name, statement of changes in equity, right? Again, the timing would be the same, right? Maybe for 1 month ended July 31st, 2020, right? And so in that format, we have a column. Okay, we have 3 columns. We have a column of common shares, and you have another column of retained earnings, and you have the third column, the total equity. Okay, so you start with by the row, you start with beginning balance, right? Start with the beginning. That will be July 1st, right? Maybe the common share, maybe this is a new company. Okay, I assume this is a new company with 0. Return earning, no, it's not a new company. Okay, so it's $10,000 common share. Return earnings beginning 94,000. Okay, are you able to see my information on the very left? Okay, so that's the total. And then, are there any new shares issued? New shares issued? No. So you put a 0 here. Do we have any net income? We have net income? Yes. That's under return earnings. Right? That's my net income. Okay. So here would be 0. Here would be this. Now it's the less dividend. What's the dividend? 5,000 minus 5,000. Okay. Now here's the total. Okay, no, ending balance. So common shares, that's still 10,000. Return the earnings ending balance. That would be 559,800. That's the opening plus income minus dividend. Okay. And so here, your total equity would be all of this together. 169,800. Does this make sense? Does anyone have any questions?
No, that looks really good.
Okay, awesome. So now let's do the third statement. Okay, the third statement. So that would be, again, you start with the company name, right? And this would be the statement of financial position, right? And for this one, remember, it's a snapshot. Okay? July 31st, 2020. Okay, so what I should start first? I should start with current asset. Okay. What is my current asset? Can you tell me?
Cash.
Cash. Thank you. So that would be 3,800. Next, what's the next?
Equipment.
Let's follow the current asset first.
Accounts receivable.
Accounts receivable. Thank you. Accounts receivable. So that will be accounts receivable 13,500. What's the next? Is this all? That's all, right? So I will have a total current asset. So that should be the 2 together, right? Okay. Now let's deal with non-current asset, right? Non-current asset. What is my non-current asset? Anyone?
Equipment.
Equipment. Thank you. Equipment. So that's going to be 170,000. Right? That's all. I don't have anything else. So my total A non-current asset is this. Now, what is my total asset? Total asset. That's going to be the sum of the total non-current versus the sum of the current. Okay, so 187,300. So these two numbers, okay, these two numbers together, that's your total asset. Does this make sense for the asset portion?
Yeah.
Okay, awesome. So now let's take a look at the current liability. Current liability. What is the current liability?
Accounts payable.
Thank you. Accounts payable. So that will be 2,500. Okay, so that's the only one. So I will have total current liability is 2,500. Okay. Now let's deal with the non-current liability. What is the non-current liability?
Loans payable.
Loans payable, yes. That's 1,500,000. Okay. Oh, my total non-current liability is, this is the only item, right? So therefore it's equal to itself. So now my total liability would be current plus non-current. Okay, that's my total liability. And I have the last section. The last section is called shareholders equity. And I have two components. Remember, I have common shares, returned earnings. So where do I find this information? Where do I find the information here? From the second statement. Common shares equals this. Your return earnings, that's this number. Okay, so your total equity equals okay. Now, what is the total liabilities and shareholders equity? So that will be this number, total liabilities, plus total shareholder equities. And magic, wow, I'm so happy. My heart was pounding. I was so afraid that these two numbers does not agree with each other, okay? I'm in big trouble, right? The total asset should equal to the total liabilities and the shareholders equity, right? If you see, they are exactly the same, okay? So that's the three statements, okay? We're gonna leave the statement of cash flows until the last chapter. We're gonna learn how to prepare that statement in the last chapter, okay? Does this make sense? Does this make sense? The way how I do it?
Yes.
So sometimes you did sum, like the sum function, sometimes you didn't. What made you decide which time to use it or not?
It doesn't matter. It's just like, you know, if you have more than two numbers, sometimes it's easier to use the sum formula, right? But if you have two numbers, sometimes I would just add them, add the two items together.
Gotcha.
Yeah. If you are not familiar with Excel, make sure you learn how to use the tool. It's very useful, especially for accountants, okay? So anybody have any questions? No?
Nope.
Okay, so if you take a look at the Moodle website, okay, you can see that the quiz, I think the quiz is due January 22nd. So I'm just reminding you, don't forget about complete your module 1 quiz, okay? There are the information I presented today, handout questions here. You can find it here. And what else I can do you? There are lots of tutorial videos, okay? If you take a look at this here tutorial question list, okay? You can see here, okay, for module 1, we have just completed, okay? These are the questions that we have videos, okay? So you try to work on these questions by yourself. And if you have problems, you can check the video, right? We have a tutor recorded all the tutorial videos for these questions, okay? So make sure you would do actual work to practice on this, okay? So it's already 1:46, 2:46. If you don't have any questions, the class is dismissed. And it's too early for me to say have a good weekend. It's only Wednesday, but you know this is our last lecture in the week. So have a good weekend, and let me know if you have any questions. If you don't very active in the class, I just feel a little bit panicking, right? I'm not sure what happened. I hope you would give me more feedback, right? You understand it? You know, you don't understand it? Let me know, right? If I'm going too fast, so if I'm going too slow, just give me feedback, right? Because otherwise I was like, oh, what's happening, right? Okay. Awesome. Okay. Have a good weekend. See you everyone on Monday.
Thank you. See ya.
Yeah.
Thank you.
Cheers. Bye.
Thank you. Remember the assignment.
Okay. Yeah. Bye, guys.